Greetings once again from Sprott Money at sprottmoney.com. We have reached now the month of February. What a month of January we had. What's February got in store for us? Well, we're going to talk about that. We always lead off the month with your precious metals projections. We're going to try to project February. I'm your host, Craig Hemke, and joining us as usual is my old friend Chris Vermeulen of the technicaltraders.com. Chris, you're looking good, brother.
Hey, thanks for having me. Yeah, always a pleasure, and definitely interesting price action in the metal space. Holy cow.
Oh, crazy month of January. Anyway, we'll begin to look ahead. And again, now we're into February, so it is definitely tax planning season, which is, something I know everybody looks forward to. But anyway, if you want an RRSP account in Canada or an IRA in the States, Sprott Money can help you save for your retirement in physical precious metal. So go to sprottmoney.com or give them a call at 888-861-0775. They will help you out. And again, why save in constantly depreciating and devaluing Canadian dollars and US dollars when you can save for retirement in precious metal? Sounds like a good idea to me. Again, sprottmoney.com for all your precious metal needs. Chris, speaking of the precious metals, we had this fantastic year in 2025.
Yeah.
And it was like everybody read the press clippings on New Year's Day and went, I got to get into this. And we just kind of almost one of those rhino horn up deals in the precious metals. And that party came to a halt last Friday. So where your focus has always been best asset now, and trying to position yourself and your subscribers into that best asset now. What is the best asset now as February begins?
Yeah, well, there's definitely a lot going on. It is tough to actually pick the best asset right now because it doesn't feel like anything is like on the verge of a big move. I feel like stock market has been on a tear. It's slowing down. It's showing, some mixed signals. It's really grinding its way higher here. Precious metals have had a huge move, and now they've, have they turned a corner? That's the big question. It was looking great up until it doesn't. One bar completely changes the picture. So when we look at things, the best assets still are U.S. equities and still precious metals. But there's a lot of damage done to the charts, which we can dive into and cover all of that here. So let me grab my charts and we can go through that. Let's take a look.
Yeah, on that daily chart as you pull it up, we've had multiple instances over the last 2 years of pulling back to the 50-day and even the 20-day as support. What do you think?
Yeah, you want to touch on equities first? Or you want to touch on?
I'm sorry, wherever you want to go. I figured that was the chart you were pulling up. I apologize.
Yeah, no problem. Well, let's take a look at the S&P 500. If we take a look at this, the S&P, obviously it's pretty noisy. It's pretty choppy. It's been chattering around. People are nervous, in the equity space. Is it going to stall out? Are we going to see it pop and expand? Who knows what new policies are going to kick into place and what kind of news is coming? But we've definitely been seeing this space show a lot of volatility, waves of buying and selling. I think a lot of money has been moving and chasing the best asset now, which has been precious metals up to this point. So from a longer term standpoint, the S&P 500 and the NASDAQ are both in a long-term uptrend. They're still in a short-term uptrend. They're just kind of meandering and grinding their way higher. But precious metals is definitely where the excitement is. When we look over at gold, this chart will load here. If we take a look over at gold, we've got obviously this huge swan dive. And you and I have kind of covered this as we've gone through things before. Now, gold has been making, as you pointed out, a series going back several years. Every rally is about 20%. And so we've seen that. Every stair step has been around 20 or more percent. We just had another big pop and move. And what's really interesting is whenever we have a measured move, like over here, there was a measured move that I had using Fibonacci extension. We got into an extra little side discretionary trade. We played the breakout. We hit the Fibonacci target. And then once you hit a 100% measured move, price can go parabolic after that. So it did. It popped. Everybody had to pile in. And then the market just shook the heck out of everybody and it consolidated. So we had the same move over here. We had this breakout. We got long for another like bonus kind of side trade in gold. We had a Fibonacci target hit at 5,200. We closed out the trade. Then it went parabolic for a session and a half after everybody piled in. And now it's shaking things out. And silver has done the exact same thing. We had a target at 106 for silver. So let's just take a look at silver. Our Fibonacci target was 106. Once 106 gets hit, we go into euphoric kind of, bubble mode. And so same as what gold did, it hit that phase and now everybody's getting shaken up. And all of this is stuff that you and I have covered many times. If we go back and look at this,
For sure.
this phase, you get these blow off moves from a stage analysis. But when you look at it from an emotional standpoint, it is a euphoric phase. I was at the VRIC when 106 was broken, and I was talking about how expected to pop and blow to potentially 120, 130, 140 for silver. And we saw that as soon as it broke 106, everybody went into a feeding frenzy. The energy was pretty epic. But everybody thinks they're going to be rich. They're a genius. They know what they're doing right near a peak. And then, of course, the rug gets pulled out, right? So
Yeah.
that's the phase that we just went through. Now, the big question, this is the big question, is do metals, trade sideways? Has the top been put in? And then we actually go into a financial reset with the equities market, with the economy? Or is this really just a quick, sharp pullback within a bull market for metals, and we still have higher to go?
Yep. That's the question.
Yeah, and I can argue both. Obviously, it's a kind of a coin toss. It comes down to managing your positions. We closed out a huge chunk of our physical metal positions at 113 for silver, at about 5,300 for gold on the Friday or the Thursday on the 28th, whatever day that was.
Wednesday.
We closed out there, and we still hold a balance of our position. And now we need to see how this is going to unfold. And when we look at some comparison charts, actually, I have this really interesting chart here of silver. Take a look at this. So this is the weekly chart of silver, 2026 at the top as of like last night. And the bottom one is 2011, like the rally up, the pauses, even this little hiccup down here in 2011, very similar to this hiccup. And then you go into this parabolic phase. And then we had a 37% correction just last week. And we had a 34% correction in 2011. So the big question is, how is this going to unfold? This is not new. A lot of people, so many people always blame it on manipulation. They're like, oh, they pulled the rug out. They're getting everybody. But this is the exact same type of price action we see in meme stocks. It's a herd psychology. People pile in. They're also the first ones to eject, and it creates these volatile prices. So whether you think it's manipulation or not, either way, this is how price almost always moves when we get into a euphoric phase. It's about how do you manage it and identify it, not so much who's doing it, right? And so right now, the big question, Craig, is like, is it going to take several months for silver to claw its way back? Is silver going to bounce very quickly, maybe in a few days? We don't know. And this is why it's important to protect your capital so it's always working for you, meaning if price sells off and it doesn't start to go up, generally, we don't want to hold it because it could go sideways for months, could go sideways for years. So that's the big phase we're in right now, is how is this market going to rebound from this layer, this level? Sorry, I'm struggling with a sore throat and a cold this week, but where are these, gold is going to bounce back as well, and trimming off some positions. A lot of damage was done. Do I think silver could hit all-time highs and go higher? I do. I think it could, but I'm also going to be looking to trim off positions as it works its way back up to 94, 90, 99. There's a few levels in here. I'll be looking at trimming and lightening my position because I do believe most of the move is over. And, a lot of people are counting on, bad news, big things happening, and precious metals are going to explode. And this is just the beginning. I kind of see it the other way. I hate to, douse the fire, but
Sure.
you know how it is. It's usually buy the rumor, sell the news. Well, I think we all know everything is out of control. Nothing makes sense. People don't trust government systems and all that stuff. That's why metals are going up. It's already pricing the chaos, the problems in. It's like same with good earnings, right? Price rallies into good earnings. They could have killer earnings, and then the stock market falls, or the stock price, because it's already been priced in. So I think precious metals are pricing this in. And there's another really interesting chart here. If we compare gold, and this one, I don't think a lot of people have picked up on this, which is if we look at gold and silver, and let's go back to 2011. I got it way back here. Okay. So what's interesting here is if we go back and look at 2011, I'll just go right over here and we zoom in. The top chart is gold. The bottom chart is silver. And
Mhm.
What is interesting here is you'll notice silver peaked out like 6 months before gold did, right? Silver was this euphoric phase, it crashed and it struggled and it slowly clawed some of its gains
Yep.
back, but it never did go to all-time highs. But
Right.
gold is the global safe haven. That's where people go to actually kind of protect their capital. Big investors kind of go there because it's more stable, it's more likely to go up. Silver is definitely more speculative. And so while I think silver could claw its way back and regain some of what it's lost recently, I think gold is actually going to rise from the ashes and be the bigger play and actually have more upside. And so gold, I do think could get up to like 6,000. Silver might actually really struggle. I really just want to see silver bounce back up towards 94, 99, and I'll be looking to trim off and moving out of gold, out of silver. And I'll also sell some gold, but I do think gold has potential to keep going higher while silver struggles. So this is like the big disconnect, right? Everybody just chased silver. I feel like it's kind of blown up. I feel like people haven't actually chased gold yet. I think gold is actually just starting. It still might take weeks, but I think it's going to eventually push higher. And then people will all pile into gold and chase it, and silver will kind of be left behind, like we saw in 2011. So there's a lot of different scenarios. It really just comes down to we have to let the price charts paint the picture. We follow the trends and manage our positions to how we think things are unfolding, right?
I think those are great analogies. Certainly from a price standpoint, so that's all stuff. I mean, most of us, we all lived through that back in 2011, so I remember
Yeah.
that well, from 48 down to, into the 20s, then back, silver was still in the high 30s and low 40s into 2012
Yeah. Yeah.
before, we got into kind of a tight money regime and there's a bunch of stuff going on with the Fed and people remember Operation Twist and all these other things. Um, so we'll see if fundamentally it works out different this time, 14 years later, but the charts are certainly analogous. Chris, what would you be looking for? I mean, I think what most people are everybody's optimistic, and okay, for a number of reasons, but
Yeah.
what would you watch in the short term to the downside? Like, I
Mhm.
mentioned earlier when you're pulling up a chart about the 20-day and the 50-day, um, price has in these rallies fallen back toward those moving averages multiple occasions, even fallen briefly below. You could
Yeah.
see tapping the 50-day just yesterday in
Yeah.
both gold and silver and then bouncing today as we record this on the 3rd. Would a big violation of those really set off alarm bells, or what would be something that you'd be like, oh boy,
There's
what we saw last Friday was just stage one?
Yeah, you bring up some really good points, Craig. So this is a very big inflection point where both gold and silver have pulled down. So we could look at it a few ways. Obviously, there was a big consolidation here, a support level, which is going to naturally act as when you come back down to it, it's going to act as support, which it has. We
Yep.
have the 50-day, which is acting as support, as you mentioned. We have a couple other interesting things. If we were to do a Fibonacci retracement from this last platform before it took
Mhm.
off, we can go down from this low up to the recent high, carry that forward. And the sweet spot, the bullish pullback for a stock or anything is between this purple and the pink line. This is the between the 50 and 38. That is a bullish. If you find support there, usually we're going to go up and hit all time like higher highs. The problem is it didn't, and in fact it's moved down to the lower range. If you hit the 618, now big damage is done. And there's a few reasons for that. It kills a lot of the momentum. But if we actually put a Fibonacci extension telling us where the upside target is, we go from the same low, we go up to
Mhm.
this high, and then we come down to this low right here. And if we carry this forward, you'll notice the 618, which is usually my first target, ends up being a double top. So now
Double
you're
top.
not only running into a previous high, but you're running into a
Yeah.
Fibonacci level where there's invisible resistance. It's just where momentum is naturally going to run out of steam
Yeah.
anyway. So that's never a good sign. And that's why I'm a little more bearish on silver, where if silver can work its way up uh, to regain a chunk of this, I want to get out. I want to start trimming off and selling a bunch. The other way we could look at it, a third way, is based on this drop using a Fibonacci retracement, telling where price could retrace. So it fell all the way down here, and the retrace, the depending where price goes, this is kind of the sweet spot. If we're in a new strong downtrend, this is where it's going to find resistance and then
Good
go
peak out.
lower.
Yeah.
And if it goes even
What was
higher,
that? What is that, Chris? I can't quite see that.
it's between $91 and $97.
Okay.
So, we could see silver from where it is right now. We could see it run another 10 or 12%, which obviously is half of the drop. That'll bring us into the purple line, which is a 50% retracement. And so if you see price get to 91, you see it get to 97 or higher, from a risk and position standpoint, I would be pretty inclined to start selling off some metals if you're a shorter term precious metals trader. I know some people just want to hold forever. People are adding here, but for my strategy, because I believe when we go into one of these major market tops, I'll just go to the bigger picture. As you know, Craig, after a huge peak, you can go dormant for a decade, right? And while nobody's wants that or thinks it's going to happen, it's usually when you don't think about it or no one's thinking about it is when it is going to happen. Like right when people bought here, they didn't realize they were in for a real waste of time, right? Before the next big move happened. So that is what I see. I see the end of this super cycle. Everything that is about to unfold in the news and the economy, I think has or is being priced into metals already. And the last thing I think you want to do is kind of, as a short-term trader, this is for short-term, is to hold it, because I think we could see a very big pullback. When we look at this move for silver, we could easily argue based on where it's gone, we could see silver back down to 70. We can see it back down to 58. It kind of already did come down to that 70 range, which is absolutely crazy. It fell like 42% from the peak. But I believe that was more of a herd, a mass kind of exodus at the same time. I believe price, even if it bounces, I think will fade back down to that 70, maybe the 58 level, maybe even all the way back down to 50 and flirt around that level. So I think there's some pretty good downside still, but it's not the downside I'm worried about. It's more so the time, right? I don't want to hold on to something for 3-5 years or longer, when I could go into a currency, or I could go into the stock market, or play inverse ETFs to profit from things falling. So that's the big question. And gold is very similar when we look at that. I think gold has more of a bullish bias, as you and I kind of touched on a minute ago. It could easily continue to move higher because it's more of a defensive play. It's more stable. So bigger money around the world tends to kind of goes to gold and then sticks there. It's not like looking for quick gains like silver, the way silver moves. So overall, I think gold could easily get back up, hit all-time highs, while silver flounders and recoups some of what its losses are.
Everybody pulls their hair out. Gold's at 6,000 and silver's still not back to,
exactly. It's interesting because when we look at the 30-minute chart, I have this short-term tool that shows us when, metals and assets get oversold. This lime green is saying things pulled back too quick, too fast, and it's oversold, and we're going to see some bounce. We saw that in gold just a session ago. We saw the same thing in silver, and now they're trying to get a little bit of a bounce. And what's really interesting is if we take a look at this other chart, this is something I think a lot of people don't realize. And so this is a layered chart. We have the S&P 500 at the top, then gold, silver, Bitcoin, and the dollar index. And this is why you and I talk about this, and why I try and share it in a lot of places, is when the economy turns a corner, economy is weakening, stock market is in a bear market, there's mass kind of selling. Everybody is in a fearful mode. They're not accumulating anymore. They're not putting money in. They're naturally pulling money out of the markets. And when the world is kind of pulling money out of everything, you'll notice everything goes down. The stock market fell on that big day. It fell 1.2 or 1.8%. Gold fell like 8%. This is just in the morning of that session. This is a 10-minute chart. Bitcoin fell 4%, silver 12%, and the dollar went up. And so my whole strategy of asset revesting is to reinvest our capital in an asset that is going to hold value or pay us a return. And so that's my whole theory is if we're seeing everything go down, sometimes one of the best positions, Greg, to me, and a lot of people don't want to accept this, is to move into a cash position and hold the cash in a currency that hopefully will go up in value. And believe it or not, the dollar, I think, has like 15 to 17% upside. If you're a Canadian holder, a Canadian investor, instead of holding Canadian dollars, you could see the dollar rally like 15 to 17% while the stock market sells off potentially in the next year. That's a pretty good return for sitting in cash. And then when you're done, you come back into the Canadian currency and you got a whole lot more money. So this is the big thing. The so many people diversify and they hold all kinds of stuff, sectors, stocks, commodities, and they're like, oh, I'm diversified. I'm like, this is exactly what happens. This was a 1-day pullback. Imagine when you get into a stage 4 decline and the stock market goes down for 8 months, right?
Right.
It's not very fun unless you're on the right side of it or you're on the sidelines watching everybody take a beating, knowing you can buy back at a lower price. So this is why it's so important to manage positions, not fall in love with an asset, and to step aside when it's not favorable. And one of the hardest things was actually selling our gold and silver physical positions, just last week. And, even members of the newsletter, everybody's commenting. It's like, I feel naked because we've owned precious metals for like decades, right? I think the last purchase was the 2020 COVID crash. And then I bought it on 2019 when metals broke into a new bull market. And so now we all feel really naked. We're like, we just sold our protection. We sold our metals. It's like we lost a child because we have these physical things forever. But that it was really difficult, but I think there's times you need to do that. And I think there's going to be huge opportunity to buy back gold and silver, potentially in a few months, potentially in a year or two, where you can load the boat for the next big move, which will be similar to like 2008, where gold found a bottom, silver found a bottom, miners found a bottom, and then it's off to the races. And that'll be, I'm excited for that because I believe the easy money was just made in metals. But once we have this correction, it's going to be like all in metals, miners. And then I think we're going to see them rally for many, many years. And I think it'll be way bigger gains than what we've just seen right now. So I'm really excited about it.
Chris, where do people find your work if they want to know more?
Yeah, the best is just go to my website, thetechnicaltraders.com, or go to my YouTube channel, The Technical Traders, and I share my daily analysis. I really just manage my own portfolio, and people copy the trades that I do. So we just navigate in and out of these markets and have 5 to 12 ETF trades a year. Very simple, super educational. We do live mentoring every month, twice a month. And it's just good overall, calm way to attack the markets. I don't get caught up in the news. I don't get caught in the media and fundamentals and all of that stuff. I just really follow price. And I was talking with David Rosenberg. We were on stage in VRIC, and it's funny. I gave my analysis, summarized it in a minute of everything going on, and then he turns around. He's like, "I agree with everything Chris just said," and then he goes on forever with all the fundamental stuff. But the charts come to the exact same conclusion in minutes, right? So
it's funny.
Yeah.
Well, brother, if anybody could go back and watch what we discussed last month, and we talked about a lot of this stuff. Things were really primed to take off.
Yeah.
And they did. And now it makes me wonder, by the time we do another one of these recordings in early March, where the heck are we going to be then? It's going to be an interesting month, brother. I look forward to visiting with you again in a few weeks.
Yeah. Thanks, Craig. Always a pleasure, and take care.
We're not done here with February, far from it. So make sure you hit the like or the subscribe button on whatever channel you've been watching, because we'll have Ask the Expert, we'll have the monthly wrap up, all kinds of stuff over the course of the rest of this month. So keep an eye on this channel, more to come. But thank you to Chris for giving us our precious metals projections for the month of February.